Good evening, everyone, and welcome. Tonight's event is hosted by the Annual Fund, the New York Club, and the Alumni Association. We do these programs once a year to thank our donors to the Annual Fund, and I'd like to thank David Hang and Chris Vlasto, who are this year's chairs. Chris is going to open our program. David's going to close it. Without further ado, Chris.
Hi, I'm Chris Vlasto, and I am the class of 1984. And as a TV news producer, I actually has to wake up at 3:30 tomorrow morning. I'm going to make this very quick. But the fact is, the Annual Fund sponsors a lot of these events. And recently we did Paul Giamatti. We've done architecture events and fashion events, and I've done media events for my group. And what it shows is that our school is one of the most vibrant, kind of dynamic places that have a cross-section of people. And in order to keep the school great, though, it requires money. And I, as co-chair with David of the Annual Fund, are trying to get a goal. We're trying to raise $4.9 million this year. We're at $3.1 million. And now, in my shameless act of a Scarlet Letter promotion, people who do not have a gold star have not given any money to Choate. So if you feel like this event is worthwhile, please try to give, because it actually means a lot, and I think David will explain further that the school, this money that we raise for the Annual Fund really benefits, it goes to scholarships and everything else, and really benefits the school greatly. But let me go further and introduce everyone, and now I'm going to read. They wrote this for me. So let's see, Anthony Malkin, I think you're the tall one, right? Both a Choate graduate and a father of a Choate graduate, Andrew. Tony Malkin is fourth generation to lead Malkin Holdings and his affiliate organizations that work in real estate acquisitions and management. I'm a TV guy, this is like way. Construction, marketing, and investments. Known for his cutting-edge leadership in energy-efficient retrofits of existing buildings, his work on revitalization of the Empire State Building received widespread acclaim. And now Barry Sternlicht, he is a parent of 3 students. Wow. 2011, 12, 13. In June of this year, Barry Sternlicht will celebrate his 3rd consecutive Choate graduation. As his youngest son, Will, joins his brother James and sister Adrian.
That's the plan.
That's the plan. Barry is chairman and CEO of Starwood Capital Group and chairman of the Starwood Property Trust and Society de Louvre. Over the past 20 years, he has structured investment transactions with an asset value of more than $40 billion. He serves on a wide variety of business, education, and nonprofit boards, and his humanitarian efforts have noted, including recognition as the Juvenile Diabetes Research Foundation Chairman's Award as their Man of the Year. And now Ivanka Trump, class of 0. Beyond her credits on television, and as author, Ivanka Trump directs real estate, hotel, and management platforms for the Trump Organization, and Vice President of Development and Acquisitions. In this role, she's responsible for expanding the company's real estate interests globally. At the same time, as when I, working on a morning television show, the people were far more interested in your fragrance over at Good Morning America than your real estate development. So they were very happy. You've launched a new line, and I hear it's rave reviews.
Thank you.
So, then Ted Hartzell. From Choate, appointed 1984, Ted is the current holder of the Lawrence M. Gelb Faculty Chair. In addition to teaching economics, he is advisor to the Economics Challenge, an annual economics competition sponsored by the Federal Reserve, where the Choate team consistently finishes in the top 10 in the country. He is also the advisor to the Model UN. Ted is the quintessential triple threat, teaching, running a dorm for 14 years, and coached baseball and basketball. That is very rough. But now, without further ado, I hand it over to you, and please try to give some money. Thank you.
All right. Thank you, Chris. All right. So let's just start with something general. What's happening if we think about the different types of the real estate market here in the New York area? Residential, apartment rentals, commercial. How are they doing?
Does any of us have any rental apartments in New York?
No. But know something about it. I'm sure you do too. Go ahead.
Okay, well, I would just say that the interesting thing to me in New York right now is that Class B buildings have a lower vacancy rate than Class A buildings. And since we have a whole flock of what I like to call pre-war trophy buildings, which other people might misnomer Class B, that benefits us uniquely. I think that another thing which is happening in New York is a lot of very exciting development. I'm going to focus on the office piece and just say that focusing on a lot of very interesting development, a lot of excitement around the Hudson Yards, see what happens. A lot of excitement about resurging downtown. Not really so sure that's happening. I think and there's a lot of excitement about Midtown South Tech, which to me is not all that exciting. What is exciting to me is that tenants are giving less space to their workers than they ever were before, and they're choosing carefully where they put those workers in order to give them the maximum experience they can have. And so buildings that have architectural distinction, neighborhoods that offer a more pleasant surrounding. When it comes to office, this is what's really resurgent, and that is what I think is really leading this B over A, and I think that's going to continue for a while as the financials and the law firms and the accountancy firms, which typically take the big blocks of space, aren't as active, and real businesses are being more conscious about where they put their people.
So I guess I'll follow up. I'll pick up a couple of things. One, the apartment market in the city is full, but it's pricing itself out of its existence. Right now you're seeing a topping in rents for individuals. It's just gotten to prohibitively expensive levels for renters. The residential market, we have one project that's going to sales on Tuesday, next week, the Baccarat, which is being built across the street from MoMA right now. Is pistol hot. The residential market is very strong. I kind of wonder about the depth of the demand at $4,000 a foot and up. There's a lot of projects being built. The Drake, obviously 1 West 57th Street, the Drake site. I do think it'll get overbuilt, and somebody's going to be at the end of the rainbow and have done a pro forma that won't work. At this price level per square foot, everything works. I do think the banks will be a brake on the supply because it's hard to finance very large residential projects. The hotel market has been pretty decent. It's also going to get overbuilt. The most supply in the nation being added to the hotel market is New York City. We're contributing 3 of those new hotels, so I should speak for myself. But there are different price points, and the structures make them somewhat unique. We're building a building on Brooklyn on the Water, and then the Baccarat Hotel, and then we're adding a Hilton Garden, I guess, on 54th Street. So having said that, the tourism to the city is enormous, and the demand is going up. I think supply will outstrip demand if they all get built, especially the mid-price of the market. And then the office market, as Tony said, we own a building on Broadway. It is the emergence of this TMT, the telecom media technology sector, which is now dominating for the first time in New York's history, I think, leasing. And the financials that are in the Seagram's building and along Park Avenue just are shrinking. And actually, for the first time, I'm hearing executives talk about the tipping point with taxes, that it's just so expensive with the bureaucracy and Obamacare and all the other things coming out. They're thinking of moving a lot of people out of the city, as you saw probably 15, 20 years ago to Plano, Texas, and when Penny's moved out. If that happens, it's amazing. You'll see the highest rents in New York in Soho and not on Park Avenue, because this media, like the internet companies, really don't care, and they don't want the four-walled glassy building. They want those buildings. Here's a trophy. They want bricks and open ceilings. And it's a totally different user that wants a totally different kind of space, and they're actually less price sensitive than the guys. So we'll see how New York City makes it through this. And the mayor's doing a good job of transforming the economy into a telecom. Google's presence downtown has acted like an enormous demand driver, and they're going to grow. But the city's vibrant. And the other thing I'd say about the city is capital flows. This is the only place in the United States for offshore investors. And so while I'm nervous about the fundamentals, I'm not very nervous at all about the flow of funds to New York City. Everybody wants a building in New York City. Every foreign government, every foreign sovereign wealth fund, every international investor. And they can show their boards a picture of a new building on Park Avenue. They're not interested in the trophy in Cleveland. They do not win any They don't win any awards, and nobody's putting a picture of the building in Cleveland
Nobody
on
should
there.
be interested in a trophy in Cleveland. Ever. Unless you're going to a triathlon
Is that an
race.
oxymoron? Trophy in Cleveland?
Well, Tony and Barry were obviously very articulate, and I agree with everything said. I think the residential market, especially at the upper tier, has been hot as a pistol, and we're seeing this both in resales at our own buildings, our Trump buildings throughout the city, but also with our brokerage company, Trump International Realty. So it's an interesting dynamic, though, because there is just no inventory. So when you talk to brokers, they're trying so hard and they're fighting like crazy to get listings, but there's so few listings to be had. So, while I agree that it does seem that there are a ton of super luxury 4,000, 5,000 a foot plus type of offerings coming into market, right now
They're not here yet.
there's not enough.
Right.
And they're all on plan, and they're all the prospect of in X number of years. So it's been very interesting. And some of the things that people are still expecting to be able to make good deals, to be able to get certain contingencies in their contracts, are just not getting. So you can't get a financing contingency if you're trying to buy an apartment on the Upper East Side anymore. It's just not. You'll lose the deal. So it's very, very competitive out there. And I think at the mid-range of the market, I don't see enough inventory coming on board to really stop that anytime in the near future. And I think New York is going to continue to regain its legs and regain its health. I think from a commercial office perspective, it has been interesting, and I sort of won't echo what these folks said before me, but it is fascinating, what we're seeing in Midtown, and the fact that leasing activity has been so unbelievably slow, even as the economy begins to rebound. And I think people are sort of acclimating to that. So when you look at sort of rezoning plans that are being presented for Grand Central area, and you think about all of these larger scale initiatives, it's interesting in light of sort of the realities of what we're seeing today. You mentioned Penny's, actually. J.C. Penney, while they did
They're
move
moving back.
out of the
They're moving back
city, and I think this speaks to sort of the Soho dynamic and this young, creative, and tech-oriented group sort of wanting to be downtown and not wanting to be in Midtown or wanting to be at least more sort of centrally located within Manhattan. They just took my husband's building, 200 Lafayette, and they want to move their whole design team from Texas back to New York because it's important for their people to be part of sort of the creative epicenter of this country.
And they weren't looking Midtown.
Yeah.
So, it's very interesting.
And that's
yeah.
a really interesting conversion of an old brick building, and very, very different from the tall glass structure one would expect of J.C. Penney.
Well, they moved off of 6th Avenue back when you were at Choate. Actually, before that.
Sounds about right.
But it's very interesting. Actually, we'll talk retail for just a quick second, and the tourism. Retail is very hot in New York, but it's very interesting also that the retailers are coming to New York City. It's not just the locals anymore. It's everyone national and international wants to be in New York City. As Barry said, Hong Kong, London, and New York City are the 3 international destinations, global destinations for capital, and therefore for people, and therefore for tourism, and therefore for shopping. And
And that's not going to change.
when you put all that together, the reality is that the internet phenomenon of retail is going to kill retail as it's known out in the open field environment. But in the high street or in the downtown, where people don't come to New York City to stay in their apartments and click, they come to New York City to go out. And every single person, you talk about TMT now, before it might have been banking, before that it might have been advertising, before that it might, I don't know if it was ever accounting. I doubt that was the case. But the young college folks want to come to New York, and they'll figure out what to do. They'll get whatever the jobs are which are interesting, but this is where they want to be. So you have this very high spend demographic, and the retail people want to service it. On tourism, you can't underplay that. You have to really put it out there. It is year after year after year of continual increase, and we don't get good statistics because the Visitors Bureau really tracks footfall in and out of Newark and in and out of Kennedy for international, and then I think they really don't track LaGuardia as much. But the reality is, at the Empire State Building, where we see a lot of, we grab a bunch of tourists, we continue to hit record numbers year after year, The hotels, I think the same thing.
We have two
Record room
hotels.
nights.
Yeah, we have two hotels in New York, one uptown and one in Soho. And it's been unbelievable how both the hospitality and the leisure traveler combined with the corporate traveler is coming back. And we're getting a lot of the large corporate business and meetings and events that really obviously had stopped during when the economy was slower. I think also people, even as the economy recovers and those trips are being planned again by the large meeting organizers, they're still a little bit reticent to host their events and their getaways at a resort. So that's really been to the benefit of New York. And you're going to New York, it feels like more of a business trip than when you're going to a golf resort. And I think people are very nervous about the perception associated with that, which has obviously been advantageous to the city.
I think on the hotel side, just to put in perspective, I said it might get overbuilt. It is the best hotel market in the United States. It runs mid-80s occupancy, and that means you're full all the time. And even in New York, there's lots of sub-markets that, like the Times Square area, would be 90% plus occupied in the hotel space. Room rates haven't passed the peak highs. You had probably 4 hotels in New York City that commanded over $1,000 a night pre-crash. They're not there yet. It's the only city in the nation, though, that even comes close to numbers like that. The next highest city would be half the average room rate of New York. So it's completely a world of its own. What's interesting, though, if you think about New York, another thing that distinguishes New York from all the other markets in the United States is that it's the only city where prices per foot for residential are so much higher than they are for office. So every single building that comes for sale or any site that comes available, the first thing you want to do with it is build an apartment building or for sale condos. So you get $2,000 a foot and up, whereas a office building will command maybe a good one, $1,100 a foot, and that would be a stretch. So everything becomes residential. So the Sony building gets bought by a guy to convert it to residential for $1.1 billion. It makes no sense as an office building, but as a residential project, we'll see if it makes any sense.
And you look at like the age of our of our office stock, and it's very old. And people, you think about all these big commercial office projects that are coming online, and they're really sort of a blip when you think about bringing this type of new Class A office relative to a city like London, where the average age of their office stock is 43 years, and ours is something like 75 plus. Which is really incredible when you think about New York being as dynamic as it is and that being the case.
And when you talk about, just so we're clear, you buy an office building for $1,000 a foot or $1,500 a foot. The Zagnors are just buying air rights for $600 a foot for an apartment building. So then they have to build the building on top of that, which gives you an idea of the resiliency there. I'd also say that it's also a major change is taking place in the workplace, and a major change is taking place in the kind of tenants which are out there. And that has uncertain impacts for the future for the canyons like Avenue of the Americas. But in places where there is an active pedestrian interaction, where there's excitement, people want the excitement. And I think that that speaks to all sorts of the new neighborhoods in New York, but also as these TMT, when I say Midtown South and technology, media, and telephony, not all that excited. A lot of those people don't care about the rents because they're not making any money. They have a budget. They want to occupy space. They're going to spend the money, and at some point they'll figure out if they have a bottom line what they can afford to rent. And when they do, they'll grow up, and they won't be as interested in ping pong tables and picnic tables with outside. What they're really going to be thinking of is where do I commute? Because there are not that many places which raises another issue for New York, for my kid to go to school. And if I can afford to get my kid into school, I might not be able to get my kid into school. So then the issue becomes, all right, I need to move north. If I don't want to be down by Googleplex because my employees are going to be rated by Google, and I don't have an ability to get my employees to work from New Jersey, from Westchester County, from Fairfield County, from Long Island without a really arduous commute. And they start to gravitate towards in between major commutation centers. So as that industry matures, it's very interesting. Its question is, will people move north back into the areas that are being gutted out by the law firms and the financial firms?
Well, I think one of the interesting things that you're seeing with a lot of the technology companies that I think have been so amazing for New York in terms of being part of the future and the cutting edge and just breathing vitality into the city. So I'm a big fan of everything Bloomberg's done in that regard and really trying to make this Silicon Valley 2.0. But One thing that is interesting is a lot of these firms, they may not have the credit yet, even if they're large companies, but they need flexibility.
Yeah.
So they're growing at a clip that it's just a very unusual dynamic where they're doubling and tripling in size every 6 months. So how do you accommodate them, within the four corners of an existing building? So it has been very interesting to see the frequency in which they're upgrading and moving and shuffling around space. So it's an interesting challenge for landlords who are serving those tenants because of the movement in terms of their space needs.
One other thing, now going back to the residential market, is the dichotomy between the action in New York City and the suburbs of New York City. I don't think I've ever seen it so great. The markets, I live in Connecticut. Most of my young guys live in the city and commute out to our Greenwich headquarters. I mean, you can't give a house away in Fairfield County right now. I think since the fall, not a house over $10 million is sold in Greenwich. And so you contrast that to the Walker Building, which we're doing on 17th and 7th, which is a conversion of a Verizon switching station. We converted to residential. We modeled $1,850 a foot, and we're getting almost $3,400 a foot. And we haven't sold the penthouses, and we're half sold out, and the building hasn't even opened. So I can't believe it. I wonder who these people are. I mean, $8-10 million for 2,000 square feet is... Come to Greenwich, you can find bargains. You can get lands and trees and everything else, and it's probably $500-600 a foot. So you're talking about a quarter of the price of New York, or sixth. Something's going to give somewhere. I mean, it's pretty interesting though. I mean, the city is. In my career, watching the flow of funds has been almost as important as the fundamentals of the towns, and I do not see. Even if the office market weakens or continues to be as weak as it is, you can sell any building in Manhattan today you bring to market at a 4% yield. The alternative for these guys is treasuries. I was with one of the sovereign wealth funds in Asia, and they said literally point blank, we have enough treasuries. So what you think is overpriced, they think is they're getting the 5 years less than 1%. They buy an office building at 3%. They're like, whoopee. That's fantastic.
But to be fair, Worldwide Plaza didn't sell. That was a big deal.
Which is kind of amazing, actually.
Yeah. So it's very selective. It's bite size. It's location. Bite size for the entrepreneur location. I think for the sovereign wealths or the international players. But the reality also is that debt capital is very, very much more available than it's been. CMBS is coming back. And lenders want to lend more, and they've been very selective so far as to whom they lend, but so far a lot of non-selected people are able to buy stuff, so I don't think they're being that selective in reality. But this is a great spot. Just imagine if you actually go reach down into the barrel and you picked out the ticket of Indianapolis, or Cleveland, or Des Moines, or Pittsburgh, or Philadelphia, or any number one of cities that used to be real cities in the United States. And that's where you were living.
We're buying a building in Pittsburgh right now.
I hope it's not the headquarters of Heinz.
They're fracking in Pittsburgh. It's actually the lowest vacancy rate in the United States in office is Pittsburgh, 6.4%, even lower than Park Avenue South. How's that for a statistic? And I only have one for the evening. That was it. You picked on Pittsburgh.
Yeah.
I had to fix the investment memo.
We'll be freeing up a lot of space at Heinz.
I was fine with the other cities.
The vacancy rate will be going up a little bit.
Point.
So last summer
That first question was supposed to last 2 minutes.
So last summer the Fed started with its third round of quantitative easing, started with buying MBS securities, and that has had a significant impact on mortgage interest rates. Do you see that carrying over into what you're experiencing here in New York? And you think it'll continue?
Well, certainly it's a good time to take a mortgage. I don't see things going anywhere else but up, and they eventually will go up. It's a question of when. There are all sorts of new proposals on the table in terms of qualified mortgagees, though, that are going to be limiting in terms of who can take mortgages. But I think for New York City, that's going to be less of an issue. Obviously, it's a good time if you have your financials in order to be borrowing and to be buying.
Better time to be buying than renting? Because you're saying that the rentals are pretty high.
I mean, the rental market is also very hot, and it's also very tight. So I'm by nature a believer in buying great real estate in locations you believe with a longer term hold period. And I think if you're buying your primary residence and you have the ability to lock in at the rates you can obtain a mortgage today, I think you'll probably be well off in a city like New York. But you know, a lot of that is a factor of where you are in your life. So you know, for a lot of people, it doesn't make sense to buy if you know that you're going to start a family in 3 years and you're going to have to sell within 2.5. So you know, I think a lot of it is just what your hold period is, and then how good a deal you think you're getting. I don't think right now you're able to strike a great deal relative to your neighbor. I just don't think those deals are out there. With that said, I also believe that New York's going up. So in retrospect, even if it wasn't a steal, I think you'll probably end up being pretty happy. And the reality is there still are some really interesting opportunities. I love what I see happening in Brooklyn. So you can look at Williamsburg and say Williamsburg is unbelievable in terms of what it's done from a price per square foot perspective relative to several years ago, yet it's still a great value proposition next to New York, and the people being priced out of Soho. So you know, I think there are some opportunities in great neighborhoods in New York as well.
It's kind of interesting when you talk about mortgages. I assumed you were talking about commercial mortgages, and I'm looking at the 10-year, and what 7-8 months ago was touching 150, and now we're buffeting up above 2, a little below 2, a little above 2, which is a huge swing. Yet interest rates have on 10-year mortgages have stayed the same or come in a little bit. So the spreads are narrowing tremendously, and it really makes you wonder. It makes you wonder a lot of things. One of the things which it makes me wonder is the fundamental traction for the economy that supports New York City. And I think that New York City has, and when we speak about New York City, you have Manhattan, and you have everything else, but New York City, it's attracting the best and the brightest in the country, period, because they don't want to be, where else?
Don't
San
pick
Francisco?
on Pittsburgh.
Pittsburgh is a lovely place.
It's a very high quality of living.
But be some cuts in Pittsburgh.
So whether you're in residential or in commercial, this is the best time to borrow we've ever seen in our lifetimes. And the only thing you know for sure is the government is subsidizing the entire interest rate complex, and they're not going to do it forever. So you know that for sure. You can call the bottom or the top, but it doesn't matter. I mean, this is the first time in my career that we're buying assets, thinking we're going to hold them for 3 to 5 years, and putting 10-year mortgages on them. I could be wrong, but how wrong can I be? We just closed a deal today. We borrowed for 7 years at 2.77%, 80% of cost. 2.77%. How wrong can I be? I mean, where interest rate is going to go? By the way, if they're 1%, all of our revenue projections are wrong because the economy is like a disaster. So, and I think our view, I think it's applicable to residential as well as commercial, is the most logical outcome of this great financial experiment the developed nation governments are doing is inflation. And if you can lock in debt, now if you're wrong, no big deal, but if you're right, you get a free call on inflation. And in 5 years, I mean, it may take 5 years to see it, but I am now unfortunately old enough to remember the 70s, and I didn't really know anything other than everybody on the Forbes 400 was a real estate guy. And they all owned buildings in New York City. And why? Because they had fixed debt and inflation hit and rents went through the moon, and all of a sudden every wealthy guy in the Forbes 400, 1 through 20, was a real estate guy in New York City, probably including his dad. So grandfather, okay, there you go. Sorry. So it happens fast. Inflation is pernicious. It sort of gets in the system, and then you can't get rid of it, and you don't know how it showed up. It's not obvious to me where it's going to come from. I don't see wage pressure. I don't really see commodity complex inflation because of our discoveries of energy, oil and gas. But I think to not pay attention to it is a big mistake for investors today because I think it could show up pretty fast. Fix your debt. don't float it. You'll get crushed if rates go up.
And it's a great, if you have assets, and we've been very conservative over the last decade, where my father's really just avoided levering anything. But it's incredibly tempting in this environment when you can borrow so cheaply. If you have great assets, you can pull so much money out for next to nothing. I mean, you just said you got a loan for $275. I mean, we're pulling out hundreds of millions of dollars for 3 points. I mean, it's the most incredible environment for 10 years. So it is interesting to be thinking about it in that regard. But I agree with Barry from an inflation perspective. That's why I love the hotel business. And we've been doing a lot across the country. We've been buying a lot of hotels because they're the ultimate inflation hedge. You price daily. You can even price throughout the course of the day. So, I think those are great assets if you think there's going to be inflationary pressures on a going forward basis.
We've got 2 questions out.
You've already mentioned a little bit about the Midtown area around Grand Central and Mayor Bloomberg's attempt to rezone there, but it's been running up against some resistance from sort of the historic preservationists. How do you see that playing out?
So I just
to interrupt you
Yeah.
quickly, so it's a good segue for me because I actually have an event with Mayor Bloomberg uptown that I have to run to. But thank you all so much for coming, and thank you guys for sitting with me. This was a lot of fun.
Thank you.
Thanks.
This is instantly going to become incredibly boring.
We lost a lot of glamour there.
Yeah, but it's interesting. I was just at the Municipal Art Society before this for their Midtown East zoning discussion, and this is being filmed, right? So I think in the end, this mayor has some very good, bold, big ideas. And I think in the end that this mayor has some time in which to get things accomplished, and I think that he'll get that accomplished. And I think that there are typically ineffective mayors who fall prey to disorganized efforts where it doesn't take a lot to unsettle them. And I think this is a mayor who actually has a very good professional team of people who are way, 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 way better than your typical appointments or civil servants. He pays them extra just so they'll come work for him, or else they're really brilliant people who work for him will get paid $1 a year. And the reality is that the opposition may be vocal, but I think that it's ineffective against the program and plan, and I hope it comes to pass. The reality for New York is it's going to take a long time to screw it up, but most of the candidates who are running for mayor would put us on that path, and I think
Do you really want this on tape?
I didn't say, I said most.
That's good. That leaves an out.
Yeah, that's an out. Yeah, Barry is much more skilled at this because in private he'll tell me about things that he thinks about, and then on CNBC he's so charitable to everybody. but the reality is that we do have a simple piece of fact. This mayor has done a number of things to develop New York City over the next 10 to 15 years. And this is the last one that he's trying to get accomplished. And no one else has gotten as much accomplished in the last sort of 30, 40 years of mayordom. And I don't think that, that we should expect that there will be in the future. I think this gets done. I think it's very valuable, particularly for an asset we own.
Okay, good. All right. Questions?
Mm-hmm. What about transportation links? There was a big controversy about the tunnel coming into New Jersey and the like. Do you see that as a break on the potential future development? And I lived in Europe for a while, so I see what they're doing, Crossrail and other things like that in London.
So my classmate has asked a question, and his question is, what about transportation and transportation links? So that's the thing behind Midtown East zoning, I think, actually, is that if you go into Grand Central Terminal and you go way, way, way down, there actually is a new train station that's largely built there already. And that will bring the confluence of 3 railroad lines together. And that'll be the first major infrastructure piece going. You've got the 2nd Avenue subway, which may get stopped again, who the hell knows, but it's a lot closer getting it concluded. I think that as far as transportation is considered, the number one thing we should be doing is concentrating development around our best transportation resources. And we need to be prepared for the fact when, to Barry's point, maybe they're going to move far, but maybe they're just going to move out to the suburbs. We need to be able to have people flowing in and out of New York efficiently. I don't know if you have anything you want to add to that.
Not really.
All right.
Well, by the way, answer any question you would like about any of Ivanka's lines. We may not answer them accurately, but we'll answer them.
I have a question. You guys mentioned briefly the notion of the suburbs and the residential real estate in Manhattan being so high, and especially being a young consumer. How do you guys kind of see, and how do you kind of build your strategy towards Queens, Brooklyn, and some of the other surrounding boroughs, and kind of the gentrification that takes place there?
Yeah, I mean, Brooklyn is definitely, obviously the Barclays Center got built, and it's basically what you saw in New York is the galleries started moving out and got priced out of areas, and they just kept moving, creating new hubs of activity in New York City. Well, New York City just got so overpriced, the restaurants and galleries, some of them moved to Brooklyn, as did the young people who couldn't afford New York anymore.
In Manhattan.
And in Manhattan. And I think all the outer boroughs are going to benefit from this. Just, I can't afford it, and it will be around the commute time. And it's only 37 minutes from Greenwich, I think, on this express. But kids or young graduates don't want to live in the burbs. I mean, everybody, they sacrifice a lot. They live behind bookcases, share 3 people in a 1-bedroom apartment. I don't need to tell you, this is what I did when I graduated college. So it hasn't changed. I mean, people want the action of the city. So, and New York is unique. I mean, it's a 24-hour city. You have very few places. I can't actually think of another place in the country that operates. The more people are out at 2 a.m. than there are at 12 a.m. 12 p.m. It's a crazy thing, and that's what makes it the city. So, I think I go back to this tax issue. I do think you could hit the tipping point, between federal taxes, state taxes, additional taxes they're going to come up with, hocus pocus finance. Even this mayor's employed some unusual accounting mechanisms to pretend his budget is balanced. And the city has a massive pension deficit, massive. And if they don't reform entitlements, I started my year-end letter, which I haven't sent out to my LPs, but I've changed the introduction like 4 times. The first line is what happens in 2034, right? That's my oldest is 21. So in 2025, the U.S. will go broke. We will be bankrupt. He'll be 34. We'll be bankrupt if we don't reform entitlements. And that comes now. I'm talking national level, but this comes all the way back to the states and municipalities that have given away. Basically, they're General Motors. The United States has become General Motors. And General Motors had to go bankrupt, and they had to take away all the health care benefits to make General Motors competitive. Some politician is going to have to tell the truth. And this fiscally irresponsible sequester, it's fiscally irresponsible not to cut spending. I mean, this may be random and arbitrary the way they're going to go about it because they can't agree on anything. But some politician somewhere has to tell the American people the truth. You just can't afford it, guys. You can't afford the compounding nature of pension benefits. And I have a pet peeve about, I'm involved with education reform with my wife, who's actually in the audience. And the teachers union does what it's supposed to do. It represents basically now the retired teachers, not the kids. They're not their client. So get over it. It's not the teachers union's problem. And the mayor will tell you this, right? He's like, how could I ask him why is he not so frustrated by it? He says they're doing their job. They want teachers to work as little as possible for the most money as possible and help their benefits retirees. With the majority of votes in the union are retired professionals. They're not active teachers. So once you understand that, the system just has to explode. It has to change. It's just not serving its constituency, which is the kids. And ultimately, it will be the Achilles heel of New York. I mean, it must fix its public school system. You cannot send everybody to Nightingale and Riverdale. It just doesn't work. And that is actually an issue for New York City's future. You know, you must attack this issue. And somebody's got to tell the truth, and some politician's going to have to run for one term.
So the interesting, this is what he doesn't say on CNBC.
I'm okay with it, though.
But the reality is this video is going to get like 20 hits on Choate.org. And 10 of them will be Barry's kids, and one of them might be mine. The reality is the development of the suburbs. Mayfair used to be an English neighborhood. Mayfair became an Arab neighborhood in the 70s. Okay, and
You're talking about London.
I am talking about in London. That's right. If anybody can find Mayfair in New York, please let me know. I haven't. I think the Mayfair itself is now a different name. But so the reality is, then people moved and they pushed off to Bayswater, or they went down into Chelsea, or they went into Knightsbridge, or they went into Kensington. They chose all these different neighborhoods, and they continue to move further and further out. New York City has a very similar phenomenon to what occurred in London and what's occurring in Hong Kong. Foreigners are buying the heart of New York as they see it, and that's a lot of areas in which people used to think that they would be living. And frankly, the Upper East Side, which used to be a lot of fun for me when I was at Choate, is not as much fun today, I guess, except maybe to other young Choaties who are running around construction sites in the snow like we used to. But the reality is that when you're looking at where you want to live, it's one thing. When I think of an alternative location to Manhattan, I think of Sao Paulo or Rio, where we were buying at 12 caps and then 11 caps, and now we're down to 8 caps, and all that value is built up there. When I think about investing, I think to myself, I have a slightly different perspective from Barry, because Barry runs a platform which requires doing deals and exiting deals. And that's to a large extent, however, it is manufactured, could go public, could do a number of different things, but that's his business. That is not at present my business, and possibly won't. And therefore, I kind of look at over a 10 to 15 year time frame, how much money am I going to make in New York on real estate? And if one were going to look to make money in New York, Queens and Brooklyn are really good places to look. Just as I think building to the super wealthy global purchaser who will buy a $4,000, $5,000, $6,000 a square foot condo and be there 20 days a year and not care. That is another angle. And to Barry's point, I'm wondering about this middle and what happens to this middle. It's going to be a very interesting thing to watch, and frankly, you guys are going to live it. That's the basic fact.
Go ahead. One more.
Barry, I would invite you to say what you say on CNBC, just for the record, okay? I think what you said about what we need to confront is very valuable. That was you who said it, right?
I think so.
Right. So this is a question's a little off the center of it, but regarding Bloomberg and leadership of the city, one, do you have any speculations as to what you see or would recommend Bloomberg do next? Because I do think he's been an extraordinary leader. And two, any comments on the kind of leadership you'd like to see coming down the pike? You touched on it, but it didn't get developed.
Bloomberg's done.
Yeah, Bloomberg's done.
He's done. He's got 314 days left. He has his last initiative is, look, it's large sodas, it's styrofoam packaging. No, these are all good things, I think. Large sodas, styrofoam packaging, and the Midtown East rezoning. And I mean, that's his plate. Mm-hmm. And as far as the next thing coming down the pike, to Barry's point, fewer than 40%, I think, of New York population, I think that's the number, votes in the mayoral election. And 90%, 85% of those voters who do vote have some union affiliation. Either they're a member of a union, or they are, certainly in the primaries, over 90% of everyone who votes is in a union or related to someone in a union. So the real question on this election upcoming is whether or not anybody is going to, as a group outside of unions, wake up and say this election matters to me and my future, and vote.
I'm not anti-union, by the way. I'm not at all anti-union. I want to represent a different constituency. When I ran Sheraton Hotels, we ran the largest union labor force probably, and it was fine. What I didn't like about the union was we paid the same wages in our non-union hotels as union hotels, but the work rules created incredibly difficult problems for you. In fact, when we renovated the New York Sheraton, I couldn't renovate the restaurant because I could come up with no model at which we would make money. And in any hotel in New York City, if you wonder why hotel restaurants are so crappy, if they're union, nobody can make money in them, and no independent operator we involve with Be Our Guest will go into a union hotel because they'll be unionized and you will lose money. When we did the W Times Square, I rented the space, the Bluefin, to Steve Hansen's group, and the delta between the union operations and his operations was over $2 million a year, which we got as rent for the space, paying it to him. And the city's, to give you, we did a project in the city. We had a union contract to rebuild the building for $91 million, and the same subs bid at non-union for $57 million. So if you want to understand why New York City is so expensive, it's the union construction. And again, I don't mind them being unionized. The unions were created to protect workers' rights, which I thought was fine. But extortion, the other side, is not fine. And we're being picketed today at one of our properties with a big, we just got an article about us for the Brooklyn project. We're building with Toll Brothers on the water in Brooklyn. That we're unfair labor practices. Are you kidding me? I mean,
most often, we're all union.
It's extortion.
When we get picketed, we're getting picketed by a union who doesn't like the union we chose to do the work. So from my own...
It's very difficult. And it makes New York City 2x as expensive as it should be. Housing would be more affordable. There would be more housing. On that project, the delta between 91 million and 57 million, there was only 25 million in equity in that project. So you had an entire turn of your capital in wage differential. By the way, the building's 97% complete, on time, on budget, and regarded as glorious. So there was no we did not hurt quality. And it's a tough thing to do. As a fiduciary on one side for capital, on the other side, I'm not trying to, I just want them to work with us and partner with us. By the way, it hurts the United States in general.
In a sentence or two, if you can do that, what would you do now, given that's the state of things?
Well, I've gotten to the point where my social issues are really important to me and the future of this country, education reform, this teacher evaluation situation that's stuck in Albany between the mayor and Albany, and the unions won't let them evaluate the teachers in New York. Unfortunately, I think the most likely mayoral winner will be Christine Quinn, and she won't fight the union and even Mayor Bloomberg couldn't really figure out how to make this work. Neither could Joel Klein. They made directional progress, but I think Joel Klein, I read he fired 9 teachers in 10 years. I mean, that's not possible, right? There can't be this is the largest school system in the nation, 1.8 million kids. And it's unbelievable. We had the misfortune or good fortune of doing some work in a public school in the Bronx. And if you go into these schools, you would think you're in sub-Sahara Africa. I mean, the quality of the building, there's no air conditioning, it's cinder block, it was built in 1927, surrounded by a chain link fence. I mean, there's better stuff in Kuwait and in Abu Dhabi, Nigeria, Botswana. And, we fund a lot of foreign aid. I actually believe we should fund a little bit of our own aid here on some of these projects because you should see this stuff. I mean, if you saw it, people would get angry. I mean, you should be upset. And I would like to see a mayor tackle those issues. I don't think any of the Democratic mayors can tackle that issue.
Well,
I don't think they
certainly
will.
Not while they're running a primary.
Right. Right.
No way.
So I drove here from Boston this morning, so forgive me, I'm not going to ask you a question about New York real estate. I would like to ask you about, potentially in my view, the biggest new market there is available, and that is Cuba. Latin America right now is open for business. I I don't know how much specifics you can get into, but I would like to know your thoughts on investing in the Caribbean countries, specifically Cuba, once the political process evaporates into a more privatized economy, and also what you would do with Haiti and the Dominican Republic. These are two assets that are...
You're way beyond my pay zone, but
I went to Cuba in '95 with Joe Moakley, on Congressman Moakley, South Boston. I actually had a wonderful time. The U.S. Special Interest Section, which was housed in the Swiss Embassy, arranged for us to meet dissidents at the former U.S. ambassador's house. How dissidents actually made it to a cocktail party with a bunch of Americans, I have no freaking clue. I think that was their union card. They are professional dissidents, and they, from time to time, they get locked up and they get
supported
special
and paid for
rations.
by the government.
Yeah, and I actually had dinner with Castro at 1 in the morning in the Hall of the People with our group. It was very nice, actually, except we were all concerned because they were barbecuing indoors, and we were afraid we were going to die of carbon monoxide poisoning. My advice on Cuba and investing there right now is it's illegal, and I wouldn't do it. And even the Italians and the Spanish and stuff who are doing business there, have their own challenges, but they're doing it legitimately. Barry does investing in the Caribbean, and so let him. I'm a consumer there.
Yeah. So I wouldn't advise investing in the Caribbean. We have done it. There's a lot of nations that are not well organized and are somewhat not too up and up. We had an investment in the Turks and Caicos, and they threw the government out and locked them up. The British took over the island. As far as Cuba goes, because it's illegal, we obviously don't invest there. But there are things I don't do today because of Cuba's potential in the future. So, for example, I don't bother investing in Puerto Rico. And the reason is that there'll be this great sucking sound of tourism to Cuba if and when this government falls and becomes legal. Everyone will go explore Cuba. It'll be the hottest destination for American tourists.
And it actually is really freaking cool.
Yeah, and it's cool. It's like preserved. It's like a whole new, so I think Puerto Rico will greatly suffer from Cuba's, a free trade agreement or something like that with it comes off the blacklist. And even, I'm actually very bullish on Florida, but I do think you'll see everyone, everybody will want to go see it. The beaches are beautiful, and they're friendly people, and I think it'll be kind of like Disney World, right? I mean, people will see a country that's gone nowhere in 40 years, 50 years, and the buildings are cool.
The cars are awesome.
I'm David Hang. I'm co-chair of the annual fund with Chris, and just like to thank the panelists. We have 7 alumni club for Choate. New York is the largest. We do about 40 events a year. So if anyone has any new programming ideas, more than welcome to share them with us. The primary purpose of events like this is for networking. We have, on the networking side, we have a LinkedIn network of 2,300 Choate alums and Choate friends. So if you haven't signed up for that, please do. We also invite you for some more traditional, old school offline networking in the form of some cocktails in the back when this is over. Also like to make the final pitch for annual fund donations. I was told today that the annual fund and other endowments, donations to the endowment fund the school from about this time of the year all the way through until the end of the year. So February 20th until graduation is all funded by donations to the annual fund as well as to the endowment. So if you have not yet given, please do. There are development staff in the back that can more than happy to take your money, and if they're not there, you can find me or Chris, and we'll happy to do the same. So again, thanks to the panelists, thanks to Mr. Hartso, and thanks everyone for coming.